Good morning and welcome everyone to the Ultimate Trading webinar for beginners. My name is Danny and I will give you the webinar today. We will open the webinar with a quick introduction to the company, as you know, and then the first part will be more of an introduction to this facility, which is called the Web Trader. And the second part will be more practical. It will be the majority of our webinar. And lastly, which will be basic essentials for trading. We'll speak about also the menu here to the right. We'll speak about value and spread and leverage and margin. And we will learn the basics of how to approach the market and design a position with certain logic. And lastly, the third part is a bonus. Maybe if we'll have spare time, we can look at how to analyze. Just nothing too crazy, just again the basics to give you the general concept. All right. And it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only, should not be constructed or applied as an investment advice, recommendation, or a suggestion. Furthermore, I would like to tell you guys that the webinar is recorded. So that means that if later on you would like to recap some parts or watch it again at your own pace, just to understand a bit better if my explanation wasn't enough, so you can access this recorded webinar on our YouTube channel. So you can search for AvaTrade on YouTube, go to our channel and search for the Ultimate Trading webinar for beginners, and then you get to watch it again. So as I said, we will open the webinar with an introduction to AvaTrade. And as you know, we are a regulated company. We exist since 2006. We have 9 licenses worldwide. In case you got a question or a query, our customer service is right here at the bottom left. You can chat with us or communicate via WhatsApp. As an addition, for people who are using a different interface than this, of course, you're not going to see that button. And for that, you can contact customer service directly through cs@avatrade.com. As in addition to that, we can assign a senior account manager on your profile to give you dedicated assistance through your process and answer your questions regarding trading queries. That means designing a strategy, that means risk money management, analysis, all kinds of assistance regarding trading. The senior account manager should be able to provide you with it. As I said, this facility is called the Web Trader. Web Trader on its desktop version. Okay, this is what we're seeing now. Okay, and we also have the AvaTrade's trading app, which you can find on your personal device. Of course, on top of that, we have the regular platforms: MetaTrader 4, MetaTrader 5, Ava Futures, Ava Options, and lastly, Ava Social. Now, since this is a webinar for beginners, not beginners only, but beginners, I think Ava Social is a very unique product that allows especially beginners to enjoy its features. And that means in Ava Social, you can follow or copy another trader. That means that, for instance, if I'll take the follow options, okay, what will happen is, if I am trader A, what will happen is I will get signals, I will get notifications with the positions that this trader is taking. Okay, I'm gonna get notifications, I'm gonna get information about the positions. However, my account will not run automatic trading. It will not open automatic positions. That's following another trader. If I'm gonna go for the copy feature, that means that I'm actively gonna copy the strategy of trader B. Of course, if I would like to see what position is taken and I would like to review it on my MT4 or MT5 account, I can do so, okay? But in general, follow means I'm gonna get notifications, I'm gonna get the information, and it's up to me if to do it similarly or not. And with copy, I'm actively copying another trader. Yeah, I'm linking my account to his account, and I will do the same. The unique thing about Ava Social is that I don't have to completely copy the strategy. What I can do is I can customize the lot size that my account will take. That means that a strategy, it will copy the strategy, it will copy the positions, but not the lot size. The advantage that this is giving me is that I can then contemplate and think about a strategy before I copy that to its full extent. And if I would like to do some research, of course, a natural process for me might be to first follow and then to copy with a low lot size and then to copy to its full extent. Again, you don't have to go through this process. You can just copy or follow straight away, but I'm here just giving you another point of view. All right. Of course, the app itself, Ava Social, is free to download, so you can all try, and I think it's quite remarkable. So it's worth downloading and seeing in the app. All right. So to carry on with, we're going to go through the menus here to the left. Okay, we'll begin from the top. So we have here the 3 lines. This is my personal information. Trade is where we are at. And each shortcut to get to here from anywhere in the website is to click on just the icon here. So for instance, if I'm in the signal section and I am in here, okay, looking at the DAX, seeing the signal here, and I want to get back to the original, to the default screen. Okay, I want to get back to the default screen. What I can do is click here on trade, or I can click in here, and then I'm back in the default screen with the full toolbar. If I carry on down, I have my positions, my orders, my history, and then signals is what I showed you now. In here, I can enjoy various signals lined by the production time. Underneath in here, we have the news, in here, discovery. So I think news is a great place to read some nice articles, to have a little bit of idea about the economy changes and certain things. We can find here different categories, maybe something commodity related. I can go through the article here, and I can see that at the bottom of this page here, we have 4 related instruments. And if I'll click it to fold it down or up, okay, folds up. So we have here crude oil, gold, Bitcoin, and pound versus dollar. And this article might have something to do with those. So that's how it goes in the news section. We have here the Trading Central mark to know that this information is not provided from AvaTrade by a third-party company. Now, in here, in the discovery, we also have some nice analysis tips. We have here analysis views. Get some nice inputs about certain scenarios that can also assist us doing our analysis. In here, we have the market buzz. So if I'd like to have perhaps some idea how maybe one of the stocks here is moving, let's say, test maybe Apple. Okay, just generally, I took what's in the middle. I mean, I could take something else if I would want it, but let's go with Apple. Of course, it gets the bigger it gets, the more mentions it has, right? We can see that it's determined by the amount of mentions, number of mentions that it has. Then the circle is bigger. We can have it presented in the table or bubbles. It doesn't really make a difference. So at the moment, I'll click on Apple. And I'll see that in here in this page, we have all kinds of information and statistics. We have here different topics that was discussed. Product release, product demand increase, price target raised, revenue increase, and IPO pricing. And I can filter specifically product release and just quickly go through the articles in here to give me a better idea how Apple can possibly move thanks to its fundamentals, right? So in general, we have 2 kinds of analysis. We have fundamental and technical analysis. And the way that it works is very simple. Yeah, so the way that it works is very, very simple. Technical will be all the analysis has been done from data on the chart. Fundamental is the other way around, so everything that is not in the chart can be considered as fundamental analysis. For instance, I have some idea about Apple date release for its new iPhone as an example. And if I go through the opinions, I see that the products is pretty positive, reviewed pretty positively, and I see good news for Apple, so I can assume that Apple will respond to that positively. If Apple is going through a lawsuit or there is a certain bad review on, in particular for its product, it might react negatively. It's not always linear, so we must do some further analysis to ensure that. But that's basically how it works. So fundamental analysis is everything such as news related to the company, also interest decisions, governmental decisions, any kind of drastic economical change will be considered as fundamental analysis. Technical analysis, maybe I'll show it to you on the chart in a minute, then it will be easier to understand. One more thing I would like to show you in here from the menus is what we have here at the almost at the bottom, which is the economy calendar. And the economy calendar is also filtered very nicely. And the way that it's structured is we have here certain events that occurred, and we have a lot of things here. Maybe to see the valid events, I need to filter one of the countries here. So in here, it's filtered by the flags. And if I'll click here on the arrow, it folds down. And I can choose maybe to stick with the CAD only. Okay, so there is right away, you can see we have here the way that the calendar is aligned. We have here the previous result, the forecast, what we expect that will happen, and then the actual will only appear when the event has took place, right? Otherwise, how can we know the result? The importance here is determined by how significant we think that the event will affect the market. So if it's a major event, we don't seem to have any today. So what I'm going to do is I'm going to expand the range, clicking here on the date, then click again on the 19th. Okay, click again on the date. There we go. And once I have this blue trail following the dates, I know that it's marked and it's showing me that range as well, and not just the 5th. And to filter the high impact event only, what I need to do is to click here on the high, and then I see only high impact events. Furthermore, I can also search for a particular event that I'm looking for just by typing here whatever I want as an example, and then I hit the search, and then I've got it. Okay. And one more very, very useful thing that I like to do is to use, we have some buttons here to see the impact, volatility, price chart, event chart, and at the end, we have here add to calendar. Just look how useful that thing is. I click on the icon here, and then I can book it in my calendar. And then I can directly go specifically to the time of the event, see the event, see the result, and directly go to the market and do whatever I need to do. Okay, rather than to remember when was supposed to be the event and so on, just on my calendar, on my phone, and I get the message, and it's very, very accessible. All right, so I think we've looked at everything we should have had in the beginning, and then we can dive into the second part. There is just maybe one thing that I would like to show you in here in this facility. Again, clicking here to send me back to the default screen, maybe expand the screen all the way up. And what I would like to show you is only for Forex, gold and silver, and this unique product is called Protect. And the way that this product works is very, very simple. All right, so what Ava Protect allows you to do, just before we carry on, it's important to know that Ava Protect is only for Forex gold and silver. And what it allows you to do is it lets you protect the position for a certain time frame. Whatever you lost during that coverage will be returned. And there is a fee when using the product. Okay, and that's enough. So at the moment, we understand that what it allows you to do is just to get back the losses you had during the coverage time. But what is the coverage time? How long can I cover the position? Basically, I click here on the box or on the shield to allow the product to be to activate the product, and then I can choose from 1 hour and to extend it with a plus here. And we can naturally see that as I increase the length of my coverage, the amount here increases as well. Yeah. So in 2 days, 92. In the beginning, we had 28. And another factor that I should remember is also the lot size also changes the range of my fee. So if I click here on the plus, I'm going to extend it. I want you to notice what happens with the fee here. So it increases just like that. Okay, and then we have, I don't think that it's linear growth. So just pay attention to that before you're taking the position. And what else you can do is very, very simple to simulate with the take profit and the stop loss, the possible scenario of the position. So for instance, we're looking at gold, and at the moment we have 500 units. So what I can do is I can just increase it by $1 to 33. And in here, I'll decrease it by $1 to 31. And now at the moment, if I'll also place some lines here for 33 and 31, okay, and then I can flatten that out just by changing the coordinates. Yes, and in here, yeah, and we are great. So in the moment in this scenario, we can immediately see that the range that we're talking about is losing or gaining approximately $570 to $580 and fee of $154. You have to agree with me that, guys, that everybody in here would be happy to pay this $154 to get back that amount. If I lost 574, I'll be very happy to pay this 154, and to make this profit of 186 if I need to pay that. So this seems to me like a reasonable ratio. Of course, if I'll go extreme and with my target, I'll go for something like that. Now it's 32.2. Let's extend it to 32.7 as an example. Still reasonable. Let's go a little extreme. There we go. So if we, let's take the same ratio here. Oh, sorry. Yeah, and if we look at the numbers now, it doesn't look as great. And the reason is that the fee is almost as much as we can gain or lose. So this makes the product here, the protection here, it makes it less effective. Now, what I would like to do in this comparison is to ensure the fee is not higher than the amount that I want to make. So what's the point using this product at all, right? Of course, it's also important to know that it's not mandatory in any way to use take profit and stop loss when using this product. You can use this product without stop loss and take profit. Just keep in mind that if it goes sideways, you can lose much more than you should have had. And as in addition to that, we are only getting back the money that we've lost during the coverage. In other words, if I choose to carry on with this position beyond these 2 days, let's say I kept it for a week or something like 10 days as an example, of course, I'll get back the personal amount in the beginning, which I was covered, but the rest of the time that I kept it open, I won. All right. And I cannot re-extend the position after, just a second. And I cannot extend a position after it expired. That means if I choose for 1 day, at the end of this day, the coverage will end, and I cannot somehow expand it by another day. All right, let's carry on with ease. I think we've covered the first part quite successfully. Let's jump on to the second part. Unless, do we have any questions till this point, guys? Anything that I said until this point, either about AverProtect or anything else specifically? Any questions at all? Is there a limit? No, Millie, there is no limit to the, not as far as I'm concerned. You can protect your positions as much as you want. Okay, there is no limit as far as I'm concerned. The only limit is, though, that it's for Forex, gold, and silver. So if you'll try to find this golden shield on other instruments, it's just not there. Okay, good question though. Thank you for the question. Any other questions that you guys would like to share with me before we begin the second part? Anything at all? Excellent. Let's carry on. So for the second part, which will be the practical part, what we're going to do is we'll fold down silver, and we can find another instrument in our, we are on the metals. Okay. There are two ways to open an instrument in this facility. One is to erase whatever name you've got there, just putting down whatever you want. So gold, pick it from the list, just as easy. Another way is to search manually. And what I'm going to do is I'm going to go for, actually, one of the commodities is not too bad. Energies, no. Even though oil was very, very interesting in the past 2 days. Palladium, platinum is the only one bearish. Let's go with platinum. Okay, red price. All right, so how do we even begin to, let's write it down. How do we even begin to work from here? Okay, so there are a few things that I would like to do to customize the chart first to get a picture that I can analyze. Let's begin from the left. So this one, we already seen that. It's the search bar. Basically, if I'll erase that, put something else, I can change it to something else. If I go to the right, we have here the time frames. Maybe we'll look at weeks. So we have different segments: minutes, hours, days, weeks, and months. Let's go with weeks. Okay, that's very lovely chart. If I keep going to the right, I can change it to the line. Also, there is slight disadvantage with the line, as we don't get to enjoy the nice tails for reversal from the line. Okay, so as you can see, obviously what I've marked here, these pieces of analysis, they don't exist, right? They don't exist. Okay, again, if I'll go to the line, those markers are not in existence. We don't have those lines, which are essential and important to include in our analysis. I'll show you again. No lines. Okay, no lines. Again, yeah, those lines, like I said, are quite imperative. There's a question here from Dirk. You recommend trading directly in AvaTrade or MetaTrader 5? Derek, thank you very much for the question. Okay, I'll be honest with you. I'm using both. I have multiple screens, so I have a couple of them opened. WebTrader on one end, MetaTrader 4 on the other end, and it's just very helpful for me to do the calculations instead of doing it in my head. The simulation that I showed here, so it's one of the main reasons, and also the calendar is here, so it's super comfortable. But if I need to choose one of another, it's a tough choice. It's a tough choice. I like MT4 and I like the WebTrader as well. Yeah, so as I showed, the lines are not here. So of course, if I'll change from the line to candles, I get a little more precise analysis. If I keep going to the right, then I actually can enable from no crosshair to crosshair, and by following me by hand across the chart, we can actually see data from the candles, which we didn't have. Yeah, we don't have nothing at the moment. Now we do. We the crosshair, lovely crosshair. So if I see horizontal or vertical line following my hand, I know that the crosshair is activated and I can do some analysis. If I keep going to the right, we have here change of layout. We can go for 2 and we can go for 3. We can even go for 4 screens just like that and change whatever we want in here. And at the moment, we'll stick with 1. If I keep going to the right, we have here indicators. We'll click on that and maybe drag the RSI to the right and maybe fix its deviations if we would like to. Maybe fix the colors as well, just to make it more reasonable. Okay, and then we have it displayed. We can get rid of it just as easy. Click on the plus, click on the save, and it's done. Furthermore, what I can do is I can click on the column price anywhere on the column price, and this is, guys, the column price, okay, from this area, right? And I can click and squeeze that down to be able to shape the chart exactly to where I need. All right, and now we're ready to maybe do some to begin. Okay, and at the moment, just a second. Okay, also 995 seems okay. 995. Yeah. Great. And at the moment, we can start constructing our positions. We'll click here on buy. As we can see, the market is bullish. It just reversed last week. If I'll switch to days quickly, we can see it a bit more visibly, maybe like that. Okay, and we can focus on the nearest resistance, which is 995. And we have another higher one. At the moment, it's less relevant. We can speak about it in a moment. Okay, and we can see there is a nice turn this week. It seems bullish, so we can maybe take advantage of that. Okay, the oval doesn't do the work. We'll go with the rectangle. All right, and get rid of the background just to see it a bit more nicely. Not mandatory at all. Of course, you guys know that my lines here are not mandatory for you guys in any way. You can do it or not. That depends on your the flavor of how you like the chart to be. Okay, so at the moment, our plan to enable this menu, I click on buy or sell. I'll go with the buy. This menu is divided to two menus. We have the order entry and the instrument details. If I click on instrument details, I get the instrument details. Among the lot size, and we have the spread, the leverage, and the margin, which is displayed outside as well. And if I'll go further down, we have all kind of interesting information here. Now, if I'll begin designing my position, the first thing that I like to do is to change the lot size to 0.01. Now, when I look at the chart and it seems bullish, we have at least 4 days in the past that was bullish, and it reached that level 978 and turned around today. Now, if I want to keep it bullish, and in a buy scenario, our intention is that the value will increase. That means that as long as the value increase when I took a buy, I will make a profit. However, how much profit I can make and how far up should I aim my price? And is now even a good price to buy because we're already in a momentum of going up. Maybe it will turn around. All those questions I'm asking myself before I'm opening this position. And now, if for instance I aim for 995, just seems to me like a good level, maybe a little higher, I'll aim for 990. Okay, what the take profit and the stop loss are doing, and I forgot to mention that in the ever protect explanation, maybe it was too early then, but I should explain how take profit and stop loss are working. So we have 3 pending orders. We have execute when price hits, we have stop loss, and we have take profit. The way that these 3 is working is very simple. There are prices that we can design for the platform to remember on the chart, and each is doing something else. So execute when price hits. If it triggers, it launches the position. It's based on the reference displayed on the top. If sell is selected, then it's going to launch a sell. If a buy is selected, it's going to launch a buy. And I can target a specific price. And then what I can do is I can set a take profit for a price for the take profit. What the pending order is doing is it closing the position with the profit. And what the stop loss is doing is stopping the position with a loss. Okay, super simple. There is nothing complicated in that. And okay, yeah. And now we'll also change that back to 0.01. And now we can see that with 0.01, if I aim for $10 change, we can make or lose $10. Okay, from 980, and we are with 0.01. That means that each dollar that it's going to go our favor will make $1. Each dollar that it go against us, we can lose $1. This is why if I put it $10 away, we can gain or lose 10. And this equation is, okay, units times movements equals sum. Just a second, units and movements and what is all of that? So we haven't designed a position yet. We need to get to that. And for that, we would like to write down a few things. One of them is the target. The other one is the time. Then we have the movements, which is the price difference. And at the bottom, we have the units. Why do we need those things? Very simple. I'm not sure that I'm happy making $10. Yeah, I'm not happy to make $10. I want to make 1,000 or maybe more. Okay, so I need to validate that this position will make me as much as I want. The second thing that I wrote is the time. Why do I need to think about the time holding this position? Because again, even if I'll take 700 as my target, my time at the moment is 1 day. That means that each candle on the chart is presenting 1 day time frame. Okay, so making $700 per day comes down to, let's say 24 days we can trade, comes down to a pretty good amount. Yeah, but if I'll do this weekly, then yeah, it's still not bad. But it's not as good as 16,000 that we just saw, right? And if it's per month, not even sure that it's going to cover my groceries. Yeah, so it's the same 700, but it has different meaning. So holding this position for a year to make 700 is ridiculous, right? We have something called overnight fee. It's a swap. The more I hold a position, the more I have to pay. Yeah, so holding this position for a year is not the brightest idea. So I think I'm going to stick with 1 week, and that's not bad at all. And I'm also going to bring back the days to weeks, and we get the numbers for weeks. All right, and what I can do now is I can think about the movements. All right, so how far up or down can Platinum possibly move? Well, 990 is really my target. Maybe I should aim higher since I'm looking at weeks and not days. Maybe I should aim for here. Okay, that doesn't seem bad. 1017. Now it's 976.5. Maybe we'll target 977 as an entry, and we'll target 1017 as our take profit. Also painted in green. Yeah. Actually, because this is precisely the resistance, and I would like to take a precautious and not to target specifically the resistance because I understand it can turn around, maybe I'll go for 1015, which is slightly lower in here. And I can also change to 975, and this way if it flinches down, I can grasp the same length. Excellent. And now we have take profit. For the stop loss, we're going to take the same measurement and just subtract 40 from the current entry. 40 from the current entry is 937, which is this, just before the support line. Quite perfect. Make it red. All right. Okay. Just a second, how did we end up with those numbers? Let's explain. Let's break it down. So at the moment, we looked at our entry 976. It's not bad, but I feel more secure to take it if it goes a little farther down. So I change it to 975. Okay, this is entry. Entry, which was also bounded by the execute when price hits. The take profit target is 1015, and okay, and the stop loss 937. Okay, something doesn't make sense in here. We need to change it to a 5. Okay. All right, great. And now we can potentially see with the same formula as before, $40 away versus 1 unit is giving us 1 unit. The same as it's written here. Units 1 equals 40 equals 40. Yeah, not bad. But again, we're not aiming for 40, we're aiming for 700. So how can we first validate that this price here is reasonable? Maybe it's far-fetched, maybe it's too far away, it's going to take it much more than a week. How can I know that? One way is to look at the size of and the ratio of how much the previous candles has moved and start validating each and every candle, putting down the information and subtracting the open from the close and the high from the lows, which is a primitive dinosaur technique called manual check. And we're not going to do manual check for 20 candles because this will take God knows how long. What we're going to do instead is we're going to quickly click on the indicators, search for AV true range and the average true range, click it to the right, and instead of 14, we'll change it to 10 and change the color to something that won't confuse us, like mustard. And at the moment, we're looking at 50 as our average, not bad at all. We're going to add here ATR equals 50. Okay, and this is our casual movement for Platinum per week. How can we know that? Because what the ATR is doing is it's analyzing previous number of candles, and according to those previous number of candles, it's giving us an average which seems to be 50. And you can specifically point on a candle at any given time on this chart to see how the average is changed. For instance, If we're going to go for a few weeks backward, we see that the average here was only 47. How can I know that? Because it's displayed here under the average true range. Yeah, we can see that in here it was 46, 46, 40, 46. In here it was higher, much higher, 55. Yeah. There is a question here from Faisal. Your question is not dumb at all. Your question is actually quite brilliant. So first of all, thank you. And thank you actually for reminding me. Okay, maybe I forgot a little bit that this is a webinar for beginners. To emphasize support and resistance, I actually landed those lines to visually help me understand what the chart capability in my eyes. So that means that those levels of support and resistance are so-called floor and maybe ceiling of my chart. This will be the ceiling, okay, 1100. Then we have a lower resistance, another lower resistance, and then we have the recent resistance, which we had in here. Which was in here, 995. And at the bottom, we have support line. So I can draw more lines, but it's irrelevant because it's too far away for me at the moment. Okay. What I did next is I looked for a certain pattern, a certain casual movement for platinum to validate that the take profit that I analyzed is actually in the range. Of course, since 50 is a casual movement, is an average movement, 40 is definitely, sorry, just a second. $40 is definitely in our range. Yeah, 50 is the casual movement. We aimed $40 away. 40 how? 40 from the entry to the take profit. Okay, and with this ATR in mind, I keep designing the position. I'm just going to jot down actual expected movement 40. Okay, and now what we're looking at is 40 and 40. Of course, we don't want to make 40, we want to make 700. For that, I'm going to give you guys another equation, which is target divided by movements equals units. And if we will quickly divide our 700 by 40, then we get, then we get 17.5. Well, sadly, we can't take half an ounce or part of an ounce or just anything that is not a completed ounce. As we can see, the minimum is 0.01. So 17.5 units is not a valid number. What we need to do is either to round it up or down. In this case, let's go down. We can see that it's insufficient, but it's very close to our amount, which is 700. Okay, so what I can do is I can either change the take profit and the stop loss to match exactly to what I want to achieve. In this case, if I will expand it to 16 as an example, or 17 as an example, it gets closer and closer to my to the possible profit, but it will have an impact on the analysis that I've done. So in this case, I'm not going to do that. I'm going to keep it just like that. And I'm pretty settled with 680 and not 700. Yeah. Furthermore, I'm looking at the numbers. It doesn't seem too bad, but I'm not sure that I'm happy with the ratio of making and losing the same amount here. What I would like to have is I'd like to have 680 as my target. That's not a problem, but I would maybe like to cut this 680 by half or more. The reason is, if I'll compare this to my balance, let's also write down here a quick calculation for that as well to measure the exposure. So we can go potential loss divided by balance equals factor, and then we have factor times 100 equals percentage. Okay, and the way that it works is 680 divided by 10,000, which is 0.68, and then we'll multiply that by 100, which gives us 6.8. Of course, we can do this in the calculator, and much more slowly. So as we said, the possible loss, what is the possible loss? It's written right here, right? It's written right here. That's the advantage. Dirk, you asked me beforehand if I use this interface or MT4. So the reason that I'm using this interface is because it's this done for me automatically. I didn't calculate this. The platform calculate this for me. So I can see the possible profit, I can see the possible loss. Now I can easily take the 680 and I can divide it by 100. Sorry, I can divide it by my balance. My balance is 10,000. So let's go. Okay. And oh, actually missed here a 0. And if I do it like this, then I get 0.068. And if I multiply this by 100, I get 6.8. Yeah, very, very simple. Okay, so that means 6.8% of my balance I can potentially lose only on this position. And I'm not really happy with that. I'd like to stay in the area of 2% only. Okay, so what do I need to do? What I actually need to do is I need to divide this by 3. Why? Because if I'll divide 40 by 3, if I'll divide 6.8 by 3, we get to 2.2. So instead of 40, we can have it $13 away, or in our case, $15 away. $15 away from where? From our entry. Why? This is to close the gap between our stop loss to the entry to potentially minimize the possible loss while maintaining our profit. Okay, of course, I will repeat that again for you guys in exactly a minute. Excellent. And now we can see, okay, that we were able to successfully, we'll write it down here as well. We were able to successfully maintain our profit while reducing our 6.8 to 2.5. How did we do that? Because, as you can see, the initial formula we used, units times movements equals sum. It's the same calculation in here. And if it's the same calculation in here, we took the initial 40 and we just reduced this 40. We reduced the 40 for the stop loss. Of course, an easy solution for here would be to reduce the lot size, right? If I want to lose less or gain less, I can increase or decrease the units. But the problem with this method is that it will also impact my profit, which I don't want that. I want to sustain this 680 and reduce only the potential loss. So in case it goes sideways, I lose 250, and if it goes to where I planned, 680. Yeah? Thinking about diversification with multiple positions in different instruments, if I split the risk this way, I have a potential to gain less, to gain more than I potentially can lose. Okay, of course, the market can go against me all the time, but this is the way that I can design it. Okay, in this case, the number of units here is 17. Okay, we saw initially it was like this, I believe, right? We took 700, divided it by 40, and this is what we what we had. Great. And at the moment, I hope you guys are still alive. I hope everybody survived until this point. Do we have any questions about anything that I have explained so far? Any questions about either the equations or this part or the exposure bit? Anything that you guys would like to share with me at this point? Any questions at all? Okay, question from Dylan. Will this work only with platinum? The answer is no. Dylan, what I wrote here generally will work for everything and not just for platinum. So you can take these equations, you can take what I wrote here, and you can just use it for any other instrument that you want, this process here, okay? It's not just for platinum. No, it's not a stupid question at all. It's not. Thank you for taking the time to ask this question. Any other questions, guys? We explain about the margin. Yes. I'm doing it now, Cliff. Thank you for bringing it to my attention. So the margin is actually what we need to pay attention before we open the position to ensure we have the necessary sum to take it. So basically, every instrument has a price. At the moment, as we can see, platinum price is 977, and that's of course for 1 unit. So the price per unit is 977 if we're gonna go for a buy. Now it's higher. And how many units we took is 17. So number of units here is 17, okay? And if we go price per unit times units, that gives us the value. Again, we don't need, whoever is using the web trader, it does this automatically for us. We can see the value here is 16,627. Okay, so if we go 977 times 17 equals 637. Okay, that's the value. And then we have the leverage. What the leverage does is it multiplies buying and selling. Okay, in our case, it's 1 to 10. And that means that I need to reserve 10% of the value as my margin impact. So to be a variable. So that means at the moment, if I will divide the value by the leverage, we get the margin impact. In other words, this allegedly 637. Yes, of course, Lambert, of course. As I said in the beginning, this session is recorded. It's recorded. You can watch it again even 100 times. Just wait until it's uploaded to our YouTube channel and you can watch it again. I am aware that sometimes some of the parts that I teach are a bit more swiftly, but that's because I want to give you as much as useful content that I can. So that's the main reason. But of course, you can watch the recording later on YouTube. So, and we looked at the value. As we can see the value in here, and if I'll divide it by the leverage is 1 to 10, and what it gives us is the number we've got in here, which is the actual amount that I need available to take the position. And in this case, there we go. Yeah, and in this case, we can see that we can safely take it. Yeah, we can safely take it. We have much more than that. This will be 16% of the margin, but we can take it. Yeah, we're not gonna start discussing at the moment if it's good or not to use 16% of the margin for a single position. Okay, it's a topic for another day. But at the moment, as I said to Dylan, what I wrote here is universal, and what I wrote here I expect that will work for other instruments as well. Maybe currencies is a bit more challenging to use this technique, but in general it does work this way, and this is extremely useful for people who are using MT4 and MT5. But whoever is using the platform in here, those calculations are done for you automatically, just as displayed in here. All right. Unfortunately, guys, we are out of time for today, so I can't give you any analysis inputs, but I really hope that through my explanation, you were able to pick here and there some bits of useful information. I wish you all best of luck with trading. You're welcome to join us for tomorrow's live Q&A. Until then, I wish you all a wonderful week and have a good day.